Good afternoon, everyone, and welcome. My name is Rob Vitullo, and I have the privilege of spending the next little while discussing the new trading features which were recently added to our online trading platform. So, you would have received a bit of background information about me in the invitation for this event, which my partner refers to as more of an online dating profile than an actual bio. Anyway, what I'm going to do today is I'm going to review these new features with you, go over how these enhancements differ from what we previously offered. Going to then demonstrate how to enter these orders online, also show you where you can access learning materials related to these changes, and finally, time permitting, close off the session with a question and answer period. Well, I hope you find this session helpful. Anything said in today's presentation or securities used in the platform demonstrations is for information purposes and does not constitute as advice. So on May 10th, we introduced a number of enhancements to our platform, including 3 trading strategies that are now available online, longer good through orders, and the introduction of buying power. Of the 3 trading strategies that were recently introduced, 2 have always been available to clients, but orders had to be phoned in and placed with a live investment representative. So those 2 trading strategies are short selling and writing covered put options. The ability to place a trailing stop limit order is brand new to Investor's Edge, and I'm going to go over both the theory and how trailing stop limits work, and then, of course, demonstrate the application of this strategy with our platform. Prior to May 10th, if you were placing a limit order to sell or buy a stock, that order was only valid up to 30 days. Since then, we've extended the order duration for up to 90 days, provided, of course, that the expiry date of the order falls on a trading session, meaning not on a weekend or a statutory holiday. So you may have noticed in the past that the US and Canadian markets share some market closures on statutory holidays, like Christmas, but there are others where one remains open, like the US markets do on Boxing Day. Early in my career, I always seemed to work Boxing Day, and I was always surprised at how many calls we would actually get at a time where many Canadians would be out shopping for bargains at the malls or spending times with friends and family. It was only then where I truly understood the famous Michael Douglas quote from Wall Street, "Money never sleeps." So when we first launched the new enhancements, we were not able to accept buy or sell orders, or market buy or sell orders, I should say, prior to 5 minutes before open. As of last week, I'm pleased to announce this has been amended and we now have that ability. So again, you can enter orders before the market opens and there are no issues there. Lastly, we have the introduction of buying power, which replaced our previous logic related to how much cash or margin was in your account. Now, in order to introduce the buying power logic onto the platform, we unfortunately had to remove the ability to settle trades to and from your bank account. However, the result has accomplished more account transparency, which I'll go over, and which prevents errors, and also offers a more timely order execution, which is, of course, what clients like yourself desire. So before we get into the new trading strategies that I previously mentioned, let's take a deeper look into what makes up your buying power. So what is buying power? Simply stated, your buying power is an estimated calculation of the funds you have available in your Investor's Edge account to purchase securities. Now, there are 5 components to buying power: the cash you have in your account, pending cash transfers out, open orders that decrease buying power, loan value for marginal securities if you are operating using a margin account, and filled orders prior to their settlement. This is a major upgrade from our previous offering, as you now have, again, much more transparency with how much you have in your account to invest. So if you're like myself and have a habit of putting in long-dated limit orders and leaving them in there, the buying power will automatically take those orders into account so that you do not overextend yourself when looking to place new orders. For example, If I had $10,000 in cash in my tax-free savings account and I put a limit order to buy $3,000 worth of CIBC stock at whatever price, call it $130 today, I'm going to make this order good for 30 days. So whether that order gets filled or not, on our new platform, your buying power will be reduced by that $3,000 amount so that you are left with $7,000 of buying power. Previous to our new enhancements, if you were to enter that same order, which remains unfilled, you may be tempted to put another order to purchase CIBC stock the following week, this time for $9,000. Now, your account shows that you still have $10,000 cash available. Yet when you go to place that $9,000 order to buy CIBC, you receive a notice that your order has been rejected. And then, of course, you're calling us and asking why. The answer is because if you were to be filled on both your $3,000 limit order that you had entered last week and your $9,000 order that you just placed, if both were filled, you'd be in a negative $2,000 cash position, which of course neither our regulators nor the Canada Revenue Agency would particularly appreciate. Now let's take a look at short selling. So a lot of you have probably seen a movie, television show, or news clip referencing short selling. The Big Short highlights the events of 2008 and a few investors who handsomely profited off of betting against the market. But what is short selling? Well, The Big Short had Margot Robbie explain short selling. Unfortunately, you only have me. In other words, shorting a stock is an investment or trading strategy that speculates on the decline in a stock's price. It involves borrowing shares of that company, selling them on the open market with the hopes of buying them back at lower prices at some point into the future. So you're essentially betting on and profiting from a drop in a security's price. Any strategy which culminates in profits from adverse price movements in a stock or security is referred to as a short strategy. So this can be contrasted with long investors who want the price to go up. You know, the old adage of buy low, sell high. This is sell high, buy low. So I have a friend who compares short selling to betting the under in an NFL football match, meaning you're cheering for a low-scoring affair or, in his eyes, a terrible game. With stocks, of course, you're cheering for the market to go down. Now, you might be thinking at this time, if I'm selling a stock and have the cash in my account, because again, you're collecting the proceeds from that short sale, what is the risk associated with short selling? You know, I could just hold on to my short possession forever if it goes the other way on me. Is that correct? Unfortunately, that's not quite how it works. First off, short selling can only be done in a margin account. Why? Because when you short a stock, you have to post margin for that short, given that you are selling something that you technically doesn't belong to you. You're also receiving cash for it, although you're not receiving it in your typical trading cash account. It's specifically those proceeds go into what we call a short account, which you can then use in order to buy back the stock that you've previously shorted. So if the price moves against you, meaning it goes higher, because again, we want the stock to go lower when we're shorting, you must post additional margin, which overall reduces the buying power that you have in your account. Now, if this continues to happen, your buying power may eventually turn negative, resulting in a margin call. Meaning, you either have to inject more capital into your account or sell securities to meet that call, a position that no one wants to be in. To put things into perspective, when you buy a stock, you know, what's the lowest it can go to? The answer is 0. But how high can a stock go? The answer is that there is no ceiling as to how high a stock can go, which can technically make your losses infinite. All right, so I just want to repeat that, infinite. It's like going to an all-you-can-eat buffet, but instead of eating delicious food, it's losses. And again, a position that no one wants to be in. Another thing to mention or to caution you on is that not every stock is shortable. So whether it's because it simply isn't marginable, as not all securities are, or there's no availability to borrow the stock to sell in the open market. Again, there's no inventory for you to actually borrow those shares to sell them. Now let's move on to trailing stops. So before we go into trailing stop limit orders, let's review what a stop limit order is. So a stop limit order may be used to potentially protect against a negative movement in your position. Now, a stop limit order has two components, as does the trailing stop. The price where your order will be entered in the market, which we refer to as the trigger price, and the limit price of the order that is going into the market. For example, if you own a stock that currently trades at $10 and you put a stop limit of $9 as your trigger and $8.50 as your limit price, well, if the stock drops to $9 or below, a limit order of $8.50 will be entered into the market. A trailing stop limit order takes this formula, but unlike a stop limit order, it's not stagnant, as we will see in upcoming examples. Now, a trailing stop limit order has a trigger delta, which can either be a dollar value or a percentage, and will continuously adjust if the price movement is in a favorable direction. Now, if it moves in the opposite direction, that stop limit order, so that trailing stop limit order, will hold still, as you will see very shortly. Now, what a trailing stop limit order allows you to do is you may potentially lock in gains, or it may allow you to minimize losses. The question might be is, is this a fail-safe? Will this protect me in all circumstances if I'm not monitoring my portfolio on a regular basis? And the answer, unfortunately, is no. The trailing stop limit order strategy does not protect you against gaps. So, I'll go over what a gap is in short order, which can be seen if there is overall market capitulation, like we saw last March, where it seemed like the Dow Jones was opening up 10% lower each day. I might be exaggerating there, but there were some rather large moves. Or if there is individual stock or sector news, which can potentially drive a price lower significantly, like an earnings report. So another couple things to note is that stop limit orders or trailing stop limit orders are only valid during regular market hours. So after hour price movements will not trigger your stop order. Along the same lines, stop loss orders placed before 9:30 Eastern Standard Time, so that's right before the market order, will not be active until regular market hours commence. So if I've just confused you by discussing trailing stop limit orders, don't worry. I think these examples will help. So here we have a trailing stop limit sell order, meaning we own the stock and we want to put a trailing stop limit order to sell in case the stock goes down. So in this example, our stock is trading at $80. And remember how I said we can choose a trigger delta of either percentage or a dollar amount? And I'm going to demonstrate a dollar amount later on. Here we see a 5% trigger delta. So your sell order will be triggered if the market price falls to $76 in this case, which is simply $80 minus 5%. Right? So again, stock goes down 5%, our order is triggered. Now, the second step to this process is to set a limit price at which your stock will be sold at, or your order will be entered at. So in this case, the trigger is $76, but you choose a $1 limit offset. Now, what does this mean? The limit price for which your order will be placed is the trigger price minus the limit offset. In this case, with a limit offset of $1, our limit price our limit order, which goes into the market, will be $75. So $76 trigger minus the $1 offset equals a $75 limit order. So in this case, this could potentially protect us from the stock going down even further, and then you can reevaluate what you want to do from there. So what happens if instead of the stock going down right away, the stock goes up? Well, remember our stop limit order example, and if you think back to the previous slide, is that our trigger delta was at $76, right? So if the stock drops to $76, I'm going to trigger a limit order to go in at $75. All right. If it was a stop limit order, that would never change. We would either have to, as the market appreciates, we'd have to constantly go in and adjust our stop limit orders higher until we are happy with where they stand. A trailing stop limit order does that automatically. All right. So here we see that, again, our stock starts at $80. And as it goes up, our trigger delta goes up in tandem with it. All right. So you can see here, the trigger delta goes up in tandem until we reach a point where the stock peaked at $95, and that trigger delta is set based on 5% below that $95 mark. In this case, that 5% is $90.25, and we still maintain our $1 limit offset, meaning if the stock trades at or below $90.25, a limit order is put into the market to sell our stock at $89.25. So now, as we move into the demo portion of today's session, you may be wondering why I haven't discussed the covered put strategy in greater detail. Now, the reason for that is that options are complex products that require more than a couple of minutes to flesh out how they work and how you can potentially use them for either speculation, income generation, or hedging with your portfolio. What I will do, however, is I'm going to show you where you can access resources on our website to learn more about options and the various strategies that you can implement. So now let's move on to our demonstration. So here I'm in my account information, and of course we're going to be looking at the two trading strategies of short selling and trailing stop limits. So I'm going to start off with short selling. So under action, here you can see that we've added a short sell onto the list, which I will then choose, and then I'm going to put in a symbol which I want to see if there is availability for me to short. In this case, I'm going to use AMC Theaters. I know it trades on the US market, and right away I get a message saying that the security you've selected is not available to short online. To find out if it is available for short selling, please contact us. All right. So right away, you know whether a stock is easily shortable or not. In this case, you could try calling in to see if it is shortable, but odds are if it's not online, there is a strong likelihood that we just simply cannot do it. All right, so why don't I choose a stock that I think we have the ability to short? And here, so notice I'm not getting a message there when I'm looking to short TD. When you're placing a short sell order, it must be done in what we call board lots. Now, a board lot is simply an increment of shares at which that stock currently trades on the exchange. Any stock that trades above $1 operates with 100 share board lots. Okay, so the minimum short amount of shares that I can place an order to short sell with is 100 shares. So then we have the ability to choose whether I want to put a market order or a limit order in there. Now, you might be thinking, if you put a market order in, and I see that TD is currently trading 87.57, and we know when we sell to the bid. When we buy to the ask here, right? So if I'm selling to the bid, if I put a market order in to short that stock, I should get filled at $87.56. Is that correct? And the answer, unfortunately, is not necessarily. The reason is because when it comes to short selling, there's what we call an uptick rule, meaning that a trade has to occur where the stock hits the ask at some point, whether it's now or whether it's at some point in the future, before your order can actually be executed in the market. All right. So what do I mean by that? a trade has to go through at $87.57 in this case before your order to short 100 shares goes into the market. If you want to learn more about the uptick rule, if you just Google it, there's plenty of information available. All right, so now let's take a look at the trailing stop limit orders. So I'm going to demonstrate a sell order on a stock, and I'm going to just choose a random one from my portfolio here. Here I see I have 100 shares of ACB in the account. Therefore, my quantity is nice and easy. It's 100 shares. And then I'm going to choose my order, which is a trailing stop limit order. Now, previously we demonstrated a percentage. In this case, I'm going to choose a dollar denomination. All right. So I see that ACB right now is trading at $11.45. So I have to determine at what price ACB will drop to, or by what denomination ACB will drop to before I want my trailing stop limit to be triggered. So if I say, okay, well, if the stock drops 50 cents from here, then I want my order to be triggered. So that automatically adjusts to $10.95. And then I want to say, well, at what price limit order do I want to enter into the market once my stop limit order is triggered? So here I'll say, I'll use $1. Make things easy. So what this is telling me is that should Aurora Cannabis drop to $10.95 on the market, then my order or limit order will be entered into the market for $9.95. So what would happen, and I'm going to go over two scenarios here. What would happen if after hours good news comes out for Aurora or the cannabis market in general, and the stock goes up by $3 after hours and opens, in fact, $3 higher tomorrow morning? So this would bring the stock up to $14.45 from $11.45. What would happen to my trigger price? Well, we know my trigger delta is 50 cents. So this would bring my trigger price up to $13.95, which is just 50 cents below where Aurora opens at the following day at $14.45. My limit offset would then just be increased as well to reflect a limit order of $12.95 should the price of Aurora drop to $13.95. On the flip side, what would happen if the stock opened up below my estimated limit price of $9.95? So for example, if bad news comes out and the stock opens up the following day at $8. Now remember, pre and post market trading do not trigger your trailing stop limit to be executed. It's only during market hours. So again, stock opens up at $8. You say, okay, well, Rob, the estimated trigger price is $10.95. My limit order will be triggered, right? And I said, yes, absolutely. The trigger order will be entered. What would happen to my fill? Would I get filled on my desire to sell 100 shares of Aurora Cannabis at a limit price of $9.95? Well, because no trading actually took place between $10.95 and $9.95, this order would not be filled. And you would simply have an order to sell 100 shares of ACB on the market for $9.95. Okay, perfect. So I hope that those examples have cleared up exactly how trailing stop limit orders work. However, you can see here that we do have also information on both trailing stop limit orders as well as short selling and options for that matter, which you can readily access whenever you wish. So now I'm going to show you where you can find that information aside from just clicking on these links. If you go to the top bar on the screen here and you click on more, you'll notice that we have a drop-down menu. If you click on Learn, this is where we post a lot of materials for you to browse whenever you wish and educate yourself on investing basics or particular strategies that you're interested in. Now, one thing to note is that I'm accessing this website or this portal post sign on. If you go to the Investors Edge website, you can also click on Learn, and this information will be available as well. So you don't necessarily need to sign in to your Investors Edge account in order to access information. So here I see, I'll look at investing, and I want to learn more about investing in stocks. And right away I see, understanding short selling stocks and understanding trailing stop limit orders. So, you could use these articles as supplements to what we've gone over today. Now, options. And I said I would show you where to find information on options. And actually, we have a whole tab dedicated to it. And as you can see right away, understanding covered calls and how to execute them, understanding covered puts and how to execute them. If you've never encountered options before, if you've never read up on them, we have a lot of great articles such as Getting Started with Options or What is an Option or Options Basics that are provided by our partners over at the Montreal Exchange, which I think are great reads in order to get yourself familiarized with option trading. All right, so that concludes the formal part of our presentation. So now what I'm going to do is I'm going to encourage you, if you have any questions or feedback, to type those questions or that feedback into, there should be an icon on the top right-hand corner of your screen where you can do that. We had a fantastic response in terms of questions that were submitted before today's session. And so I'm going to start off by answering one of those. All right. So Richard asked, can Investors Edge do options trading? And hopefully I've answered your question, Richard, in the presentation. We absolutely can, and we can execute a number of trading strategies with options or using options online. And I've showed you now where you can access information about those option strategies. However, if you are currently using an Investors Edge account and you do not have options coded on your account, so you're basically not able to trade options at this time, I'll show you what you can do in order to get your account updated with options trading eligibility. So here, I showed you about the Learning Center. We'll click on the Form Center. So as the Form Center opens, and say I'm interested in making option trading available in my tax-free savings account, I'll simply go into this drill down and look at the TFSA account application PDF. So when you do that, notice that it asks you, are you A, opening up a new tax-free savings account or updating an existing account? And here I would select that. I would put my account number in here, fill out the information associated, whether it's your personal or employment information, answer the questions that you need to. And then, of course, you must select that you want your account enabled with options trading, and then the strategies which you want your accounts coded with. All right, so in a TFSA, we only allow the purchase of calls and puts and covered call writing. Remember how I said covered put or short selling is only available in margin accounts. A covered put strategy, which I've mentioned today, it essentially pairs with shorting a stock and writing a put against it. Again, don't want to get into too many details, but that is only available for margin accounts. Also, if you've never traded options before, there are certain strategies that are very complex and you have to really understand the risks associated with the strategies. So we allow those only in margin accounts as well. Okay, so on to question number 2, and this one comes from Regine. Can you transfer a TFSA from another financial institution to Investor's Edge? And the answer is absolutely, right? And you can do this in two ways. One, you could do it in cash, or two, in kind. In cash is basically saying that, whether you have stocks or just cash in a tax-free savings account at another institution, it's only going to come over as cash to Investor's Edge. So if you have stocks over there, then they will sell your securities prior to transferring over to Investor's Edge. If you're asking for it in kind, that means that no, they're not going to sell your stocks over at that other institution, and we're just going to transfer those positions over to Investor's Edge. So once the account is open and everything's transferred in, you still have the same portfolio that you had at your previous institution. So both for updating your account with options trading and for requesting a transfer from another institution to Investor's Edge, you can go to a banking center and get assistance with this, and it might make your life a bit easier. So KV asks, how do you activate the U.S. Trading account? And that's a great question, KV. And actually, one of the benefits of our new enhancements and moving over to buying power from the previous cash/margin is that the U.S. trading account or sub account is automatically enabled. All right. So what I mean by that? Well, if you have a tax-free savings account, well, you can trade and hold Canadian dollars in that account. You can hold U.S. dollars. In fact, you can hold a number of different currencies, but we'll just focus on Canadian and U.S. dollars. Previously, you would have had to have phoned in to make a transfer from a U.S. dollar bank account, for example, to your U.S. dollar tax-free savings account, and then if you had a margin account, for example, where it doesn't matter in what currency you're buying or selling a security, as long as you have the available buying power, your order should go through with no questions. In the past, you would have actually had to place the trade with someone over the phone in order for that account to be activated. With our new buying power, the U.S. trading account is automatically activated. So again, if you only hold Canadian dollars in your margin account and you want to buy a U.S. stock and go into a negative position in your cash in U.S. dollars, you have the ability to do so. So that's, again, another one of the benefits of our enhancements, and I appreciate the question. Our next question is from Suzanne. Please explain the process to set up a tax-free savings account. That's a great question, Suzanne. So to do this, I'm going to actually show you just how easy it is to open up an account with us, and I'll do that by demonstrating. So here, from our homepage, that's not it. Right up front, it asks you, or it mentions that you can apply for a new account online. And these are the accounts that can be opened by yourself online. And in fact, as long as you are a CIBC online banking client, you can open up these accounts paperless with digital signatures, which is a much better user experience because you can do it from the comfort of your home. So here I would click on Apply Now. And then what it's going to ask, again, is, are you a CIBC online banking client? You'll simply select yes, sign in to start. And this is where you enter your online online banking sign-on information. So your CIBC debit card number as well as your online banking password. Once you do this, it pre-fills your application so that you just have to answer a few questions before you type in your name for a signature and hit submit. All right. Otherwise, if you don't want to go through this way, you still have the option of going into a banking center and having a representative help you out with this. Okay, Farah asks, when I want to sell my shares, how do I make sure I get the price I want, even if the price fluctuates? And that's a great question, Farah. So we briefly touched upon the difference between a market order and a limit order earlier in today's segment. Now, it depends on what you're prioritizing. It sounds like from your question, you're prioritizing price versus timeliness of the order. And why I say that is because, if you want to get filled on an order right now, so in this example, you're saying you're selling shares. If you want to sell your shares and you want those shares sold immediately, absolutely, we can get that done. However, there's no way to guarantee at what price your order will be filled. On the flip side, if you say, well, I'm only willing to sell my shares at a certain price, which is what it sounds like you want to do, then you're going to enter a limit order to sell the stock. The one thing you might want to, or you'll need to know though, is that there's absolutely no guarantee that your order will be filled at that desired price. So again, if you're prioritizing timeliness of your order, then a market order is more desirable. But if you're prioritizing a specific price, then a limit order is more desirable. Also, one thing to note there is that, in a fast-moving market, and you're placing a market order, then the order fill price can be much different than when your order was first placed. So you must be aware of kind of how volatile the market is. I'm sure you've had some experience with that. Okay. Randall asks, how can I transfer funds from my RSP account to my CIBC checking account? That's a great question, Randall. So, and I'm glad you brought that up, because I've only talked about enhancements to trading features, but what we've done actually over the last few months is we've added a lot more self-serve options onto our platform. So I don't know if you've had a chance to check out which self-serve options I'm referring to. So why don't I show you? So under more, we've already gone over where you can find more resources associated with the trading strategies that we discussed today. I've showed you, if you want to update your account or have any questions about some of the forms to do so, you click on the Form Center. Then if you're looking at some of our self-serve options, you'll click on Preferences. All right. So here I see that we have the ability to submit an RSP withdrawal online. All right. And this has only been added, like I said, within the last little while. Previously, you would have to phone in, speak to a representative who would then process that withdrawal for you. Now, you mentioned that you want to transfer funds from your RSP account to your CIBC checking account. One thing to note, that if, for example, you're going through this process and you click on the RSP withdrawal request, that if you don't see the desired CIBC bank account attached to your RSP account, well, another self-serve option that we've added is the ability to link CIBC bank accounts to your Investor's Edge account. All right. So again, if you don't see that checking account on that list to withdraw the funds from your RSP to, well, you can simply submit a request online yourself in order to have that account added. So one thing to note is that you only have the ability to link one CIBC Canadian dollar bank account to any given Investor's Edge account and one US dollar account. All right. So we can't have multiple bank accounts attached to any given Investor's Edge account. Another thing, because we talked about enabling or how to activate a US stock account. Well, if for whatever reason you currently don't have US trading enabled on your Investor's Edge account, you can click on this link in order to do so. And of course, it took me all out of the screen. But regardless, it's simply submitting a W-8 BEN in order to have U.S. trading added to your Investor's Edge account, or going into a banking center and submitting a valid copy of a government-issued ID, a government-issued photo ID, that is, which will then be sent, and then your account is good to go. So I think that is all the time we have today. I want to thank you again for joining me and for participating in this session. I hope you found it worthwhile. And what I will say to you is, stay tuned for more webinars like this. And again, hopefully we find other topics that are of interest to you. I just want to say a copy of this webinar will be sent to you via email when it is ready. So, within the next 48 or 72 hours. So if you want to, go back at some of this and take a look at some of the strategies that we went over, you can do so whenever you feel like. And lastly, I'll say again, thanks for joining, and we really do appreciate your business, and stay tuned for more exciting things to come on our platform as we move forward later this year. So thanks again, and enjoy the rest of your week, everyone. Take care.